Welcome back to Market on Close. I'm Oliver Rennick. Let's bring in Alan Nuckman, Chief Market Strategist at Agora Financial. Alan, I know you want to talk stocks, so let's get crude out of the way first, and then we can get to some equities, all right? Why is crude unchanged after this insanely shock build of inventories today?
Because we're back to 45. Make it very simple, okay? We talked about this about a month ago. I said the breakout in crude and the XLE was the biggest deal that we've seen in the last couple of months. It wasn't the markets making new highs. It was the fact that a bottom base was in place for a lot of these suffering energy stocks and sector, and that was a healthy sign. And that was the catalyst for this market to make this recent run-up. If you look at crude oil, it had dropped from 60 to 30. What's the midpoint of that? 45. So we're back to the 45 level and broke out of that sideways range. Crude was almost untradeable for a couple of months. I mean, it went nowhere. And that's usually a sign, obviously, when it coils like that there's going to be a breakout. And it was a continuation pattern to the upside. So that's a healthy sign. So that was the last of the asset classes to perform and show this bullish boom that we've seen across the board. So it is a good sign. And I've always used crude as a barometer, but for a long time it was disconnected. And now it's showing a little bit of correlation to the overall macro market.
You know, I think this is an interesting way to put it because it was untradeable because it was just doing nothing, right? And it seemed like once we got the vaccine news, crude woke up, right? I mean, we could talk the OPEC stuff. I know that's part of it. Well, you don't think so?
Well, even when we were having all these vaccines and all these positive news that should have moved the market, for whatever reason, it didn't. And I mean untradeable in the stance that you need a market to move. You need volatility as opportunity. If the market's not moving, let me give you another example. I'm an old school bond trader, right? If you look at the treasury bonds or if you look at the 10-year notes, the 10-year notes have been in a 1-point range for a couple of months. They used to do a point in a day. So it's like there's like no movement there. So even if you buy the low and sell the high, let me tell you one story because I'm an old school commodities guy.
Okay.
When I was on the trading floor, when I started as a runner, I worked in the grain pit. Now, corn was down to the $1 handle at one point. It was below 2 anyways. I saw a day where we saw a half-point range, so a half-cent range. So even, that's essentially, you got 2 ticks on the day. That's it. So sometimes markets don't move. That's the beauty of the markets now, and this is the best time in the history of the world to trade because you can trade any market, anytime, any direction, and there's always opportunity. Just look somewhere else.
That's a pretty corny story, Alan. All right, so hey, let's talk. I know you're a technical guy, but let me put my narrative on crude here for a sec, because it connects to the market, all right? Crude oil was basically saved from a series of lower highs because it popped on vaccine news. Now, it broke out about a month later, and we've been trading above 43 cents. But if you look at crude as this kind of validation of recovery underway now in the economy. To me, it has an interesting segue in today's session because once again, Alan, the stuff that's working best, the best place to be today are companies that depend on reopening. And to me, that's a pretty important message here that this is not about us suddenly getting worried about the future or something.
Are we ready to talk stocks?
Let's talk stocks. Those are stocks. This is the market. The reopening trades that are working. Those are the stocks.
I wanted to give you your commodities corner because I know what that's what this segment is. So I would give it to you. But also, like I said, I thought it was a big deal for XLE. And you've looked at some of these. Look at Oxy. Look at Exxon. Look at Halliburton. Valero. I mean, energy stock after energy stock after energy stock. And that XLE has rebounded. And now it's got a lot of upside potential because, again, it was about risk reward. The market was looking for stocks that hadn't participated. And that's where the value was. And now we've seen we've seen some rebound. Okay, so you buried the lead coming into this. The break was the breaking news. You buried the lead. The big lead, obviously, is Facebook. Okay, but the news is that Facebook is only down 2%, even with the idea of breaking Facebook up. So that shows the resiliency of the market and how strong the stock market is. Yeah, today we made new all-time highs. Again, backed off, saw some profit taking for whatever reason. We're going to see that, and that's healthy. But yesterday, we saw all 4 major market indexes close at their all-time forever records. So this market is strong. It's about being selective now and finding that value and that good risk to reward on stocks that haven't been on a straight up tear, maybe necessarily.
So, Alan, do you have a strong viewpoint on whether or not we should look at the NASDAQ as having broken out? Is it a false breakout? I mean, we're now dipping below that September level. What does that mean to you?
Well, you want to watch things on a weekly basis. Otherwise, you go mad watching it tick by tick, but that's what we have to do. We broke it out. I look at the NDX 100. I look at that and it broke out. Looking for about a 2,000 point move. That was the amount of the drop that we saw on top of the old top. Looks at 14,500, which is about 15% above where we are right now. Now, let's remember, this stock rally is not because of the big boys in tech. That's what's most amazing.
Yep.
It all happened without Apple. Now, Apple did make some new relative highs today before giving it back and going below the 126 level. That 125.5 was significant multi-month highs, but gave it back. So let's see what happens over the next couple of sessions, and let's see if it's a fake out breakout or if it's real, because you want to see it sustain through there instead of just getting us all excited and positive that it's on its way.
Okay. Alan, fun conversation. Thank you, sir. Appreciate it. And I better get an invite for one of those bottles behind you once this thing is over. All right.
Yeah. Well, that's the thing is the bottles keep dwindling. The bottles keep dwindling, and I'm more European now because I have wine with a lot of meals.
Yeah. Spoken for the rest of us, too, during quarantine. We've all become European during this period.
Very European.
I appreciate it, Alan. Good stuff. Fun as always. Mr. Nuckman's Chief Market Strategist at Agora Financial. Weekly candles to preserve your